Good evening, everyone. I'm Tara, and I have Miss Susan with me today, and we will be your host for the evening. Welcome to the seventh webinar of Bridging the Gap. Before we start, let's have a big shout out to the two organizations who made this possible. Miss Susan, over to you.
Hi, Tara, and a very good evening to everyone. Yes, happy Deepavali to those who are celebrating today. And I am super excited for today's session, Tara. But like you said, Bridging the Gap was made possible because of two organizations. One is the American Center Colombo. So those who have been joining us for the last couple of weeks, you will know that the American Center Colombo is a branch of the US Embassy, and they are dedicated towards empowering the youth of Sri Lanka and giving them the skills that they need to be global citizens. So Bridging the Gap is a program that is in collaboration with Headway Learning Solutions. And Headway Learning Solutions, Tara, like you will know, have been in business for nearly, I would say more than 20 years now.
More than.
More than 20 years. And Headway is an organization that deals with English language training and testing. And also, they do consultancy. So they provide you solutions in how to develop English language and communication skills. So I think while I speak, Tara will be sharing the links to the American Center Colombo. You can follow them on Facebook and also their Instagram to know about many such programs that they conduct absolutely free of charge. I would say, please do go visit these links and you will know a lot more about the programs that they have, and also the Facebook page to Headway Learning Solutions. So if you have an organization and you want to know how to develop communication, how to develop English language skills, do get in touch with us and we will be able to, help you with that. So Tara, super exciting topic today. Yes.
Exactly. Managing my own money, let alone the others, as well as savings and investing, has always been a strenuous job for me. How about you, Miss Susan? What do you think?
Definitely, Tara. Definitely. I think sorry, got a bit tongue tied over there. Money management has been, something that I've tried to acquire, but it has been such a difficult task, because I don't think we're actually given the skills or we have the perspective to look at money in the correct way. But then, unfortunately, we depend on it, isn't it, Tara? You and I and everyone depends on money. Yeah, depends on it. So yes, Tara, to answer your question, a very lengthy answer to your question there. To answer your question, yes, it has been something that I have been struggling with. I am still struggling with, and I am sure that today is going to help me.
Indeed, Miss, indeed. So to talk about personal finance management, we have with us today the retired treasury manager of Nestle Lanka, former manager of Clean Data Lanka, a certified leadership trainer, and distinguished Toastmaster, Mr. Samuel Jayaselvam. Welcome to the webinar, sir.
If I ask you, why do you study? Most of you will answer saying, to get a good job. And if I ask, why do you need a good job? The answer would be, to get a good salary. And if I ask, why do you need a good salary? The answer would be, to buy things that we need, to live comfortably, and to be happy. A very good evening to all of you. Ms. Tara, thank you for that introduction. So we saw, to be comfortable, to be happy, we all need money. We also want to be happy and comfortable from the birth till death. I am sure all will agree. However, we are not in a position to earn money from birth till death. If you take an average Sri Lankan, he may live till 80 years. So if we divide the life of 80 years into 4 sections, the first 20 years, from birth till first 20 years, you don't earn any income. Your parents earn or your guardians earn, and they take care of your needs. But when you enter the second 20 years, 20 to 40, you start working. And then you continue working from 40 to 60 years. And at 60 years, you retire. And you may live around 80 years. That's the average lifespan of a Sri Lankan. So from this chart, you will realize, though we live till 80 years, though we want to live comfortably, happily till 80 years, we are not in a position to earn money for the entire 80 years. Only half of our life cycle that we are earning money. The top 40 years, you don't earn, and the bottom 40 years, you earn. So while you are earning from 20 years to 60 years, you are not only earning for you to live comfortably, but you are also earning to put aside some money for your retirement, 60 to 80 years. Which means you need to start being careful with your finances from the very first month you start earning. When I say you need to be very careful from the beginning, there is one reason. Now, if you see 40 to 60 years, though you are working, though you are earning a salary, during that period, generally people have very high expenses. Like, for example, your children, they do their higher studies, they go abroad, they get married. Also, after passing 40, 50, you start developing various sickness. You may have your heart problem, kidney problem, various other problems. So you need a lot of money for your medical expenses, which means the amount of money that you can put aside will be less. From the time we start work, from the very beginning, maybe 21, 22 or 25 years, when you start working, you need to be careful how you manage your money, your finances. While spending money to live happily, to live comfortably, you also need to invest money for your future. Having said that, let's see how much we should earn. We are talking about income. How much should we earn? The average Sri Lankan per capita or average income per Sri Lankan as at now is US dollars 3,682 per year, which means it's around rupees 62,000 per month. Now we saw you are earning from 20 to 60. So the midpoint is 40 years. So when I say average salary, we could also say at 40 years, all Sri Lankans should be earning 62,000 rupees. That is the average income. So you need to know what is the average income of a Sri Lankan and make sure you earn that money. Now, if you see in this chart, if you can earn more than 62,000 rupees at a very early stage, maybe at 23, 24, 25 years, you earn more than 62,000 rupees, which means you can live a very comfortable life, a very happy life from a very early age. If you earn around 100,000 rupees at 25 years, you can be definitely happy and proud because your lifestyle is going to be more comfortable, more happy. You are above the average earning of a Sri Lanka. But on the other hand, at 40 years, if you still are not earning 62,000 rupees, your lifestyle will be with lot of difficulties, lot of hardships. So remember, before 40 years, the earlier you earn more than the per capita average income, the more you earn above the average income, your lifestyle will be more comfortable and you can be more happy. On the other hand, if you don't earn the average income, your lifestyle will be with a lot of difficulties and you may have a little unhappiness after 40 years. So always know what is the country's average income and try to earn more than that and early as possible. So we need to remember this always. The per capita income is not permanent. Every year, it keeps changing. Every year, this will be changing. So always you need to keep an eye on the per capita and make sure that you earn the average income of the country. Having said that, let us see 5 types of people in Sri Lanka. 1, income minus expense equal debt, which means your expenses are higher than your income. And you need to borrow money. I'm very sad to say many Sri Lankans fall under this category. Soon after they start working, they buy a vehicle on lease. They take a bank loan to buy certain items, a laptop, TV, etc. Even to get married, many Sri Lankans take a loan. They get 1 or 2 credit cards and buy things using their credit card. From the beginning, their expenses are high and they borrow money to meet those expenses. The second type of people are income minus expenses equal 0, which means they are very careful with their expenses. They don't spend more than their income. So what they earn, they spend, and end of the month, they have nothing left. Now, these people are good. They are smart. However, what happens when a sudden need comes? For example, somebody gets sick You may have to spend money if you're planning to do your MBA. You want to get married. You want to buy a television, or you want to do some repair at home. To do these things, you need money and you don't have the money. And then once again, you have to borrow the money. The third type of people, they are very careful with their expenses. They carefully spend their money, and at the end of the month, whatever is remaining, they will save. They will put it in a savings account. Now in Sri Lanka, we know many of our mothers, especially, or grandmothers, what do? Whenever they had to do some marketing, they will take some money and slowly hide it inside a bottle or under the paper in their almirahs, cupboards. That is saving. Or you get a tool, a saving box, a till, and you start saving money in that. When you put your money in a savings account, you will be getting a small interest, around 3% or 4%, the maximum today, which is good, but not enough. Save first and spend what is left. This was told by the billionaire investor, Warren Buffett. Warren Buffett, as some of you may know, is one of the richest men in the world today. There were many years he was the richest man. And he says this: save first, spend what is left. The fourth type of people, income minus savings equal expenses. What do I mean here? Out of your monthly income, you put aside a certain percentage for savings. Let's say 10% or 20% of your income is put aside into saving. And then you manage your expenses with the balance, what is left. For example, let's say your income is 50,000 rupees per month. And if you put aside 20%, it means you are putting aside 10,000 rupees. And what is left is 40,000 rupees, and you manage your expenses with that 40,000 rupees. Now, these are smart people, and this is what Warren Buffett is recommending. There is a fifth method, or the fifth type of people: income minus investment. Income minus investment. You put aside a certain percentage, like I said earlier, 10 or 20%, but instead of saving, you invest it and you manage your expenses with the balance. Now you may ask, what is the difference between savings and investments? Now let us look at a simple example. Let's say I have 1,000 rupees with me. Now I have a choice. I can buy a shirt with 1,000 rupees. Or you can invest that money or save that money. If you are saving that money, let's say you put that in a savings account, you may earn about 3% per year. So after 1 year, you will have 1,000 rupees plus 3% saving, which is 30 rupees. So altogether, you will have 1,030 rupees after 1 year. Now we need to remember, prices don't remain the same. These days, you find people shouting, protesting, saying the prices are going up. The cost of living is going up, or inflation is going up. If we say the average inflation is 6%, for example, the same shirt that was 1,000 rupees is going to cost you 1,060 rupees. So you saved 1,000 rupees. Now you have 1,030 with you, but the shirt is 1,060. So you are short by 30 rupees. I hope this is clear to everyone. So when you save money inside a till, inside a box, inside a bottle, inside the rice bag at home, it doesn't earn even 3%. But on the other hand, prices are going up. Inflation is going up. Therefore, instead of saving, you need to invest. Now, when I say invest, you are investing for a higher return, for a longer return. Let's say you invest the same 1,000 rupees for 10% return. So after 1 year, you will have 1,100 rupees with you. So the shirt is 1,060. You have a surplus of 40 rupees with you. That is, in a simple way, the difference between saving and investments. I hope it is very clear. So more than saving, you need to invest. You need to invest. So let us see what are the investment opportunities available. Number one, fixed deposit. Now we all know what is a fixed deposit. You go to a bank or you go to a finance company and deposit your money for 1 year or 2, 3, 4, 5 years. Normally, you cannot have a deposit for more than 5 years. At the end of the period, you will get an interest. Now, some of you may remember, or some of you may ask me, what happened to some investors who deposited their money at Golden Key, The Finance, and few other finance companies? So how do we know whether our money is safe? And they blame the finance companies, they blame the central bank for this. But in reality, as individuals, we need to know where to deposit our money. So I would like to share 2 things here. One, you need to check the rating of the bank or the financial institute. When I say rating, there are certain organizations. They study the banks, they study the financial institutes, their assets, their income, their liabilities, their expenses, and then they give a rating. The best rating will be triple A, A. And then it comes down, double A, triple B, B, double B, then B, then triple C, double C, and so on. Recently, in the news, you would have heard that Sri Lanka as a country has been rated triple C1, which means it's very low. And what is happening? Because of that, foreigners who have invested money in Sri Lanka, they are taking their money out. People don't want to invest in Sri Lanka, they are scared. So it is the same thing with a bank, with a financial institute. So you need to check the rating. And in my personal opinion, where I invest, I can recommend, I always look for double B or above. I never invest money in a bank or a financial company if the rating is below double B. Second thing you need to remember is, don't put all your money in the same bank, same company. Now there is an old saying which goes like, don't put all your eggs in the same basket. What does that mean? If you put all your eggs in the same basket, if the basket falls down, all your eggs are broken. But if you can have several baskets and put eggs in different baskets, even if one basket fall down, the other baskets are safe. So it is the same thing, fixed deposit. What you need to do is not to put all your money, not to deposit all your money in one place. Split it in 3, 4 banks and finance companies. Now, what I personally would do, if I have 4 million rupees, I will put 1 million in a double B bank or company, 1 million in a triple B, 1 million in a A, and 1 million in a double A or triple A company. Now, why do I put in different ratings? One is not to put all your eggs in one basket. And there's another reason. Now, a bank which is rated triple A, for example, HSBC, Standard Chartered Bank, these are all rated triple A. Citibank, these are all rated triple A. If it is rated triple A, it means it is 100% safe. But the bank which is rated triple A will pay you a low interest. If the rating is high, the interest rate will be low. And if the rating is low, the interest rate will be high. Because that is the way you can attract investors to come and invest their money. So always remember, if you put all your money like the finance, like Golden Key in one company, which is having a very low rating, there is a very high risk. But of course, that company will pay you the highest interest. The higher the risk, the higher the interest they will pay. That is why you need to split and put in different companies. So 2 things you need to remember. Check the rating. If any finance company doesn't have a rating, don't deposit your money with them. You can ask the bank, the finance company, what is your rating? And they will mention you. Or you can Google and see the rating of every financial company, bank in Sri Lanka. And second is, don't put all your eggs in one basket. Split and put your deposits. There are companies like Fitch Rating, PricewaterhouseCoopers, Moody's, and few other companies who do this rating, RAM rating. And there are one or two local Sri Lankan companies also who do this rating. Personally, I don't trust the local rating, but it is left to you. But check the rating. Don't invest in a low-rated company or no-rated company at all. The second type of investment is stock market. Today, many people talk about stock market. Now, when you invest in stock market, which means you buy shares of public quoted companies which are listed in the stock market, stock exchange. Let me give a simple example. ABC company share is sold at 10 rupees per share. So you go and buy 1,000 shares from ABC company. So you have spent 1,000 shares into 10 rupees, 10,000 rupees you have invested. After 1 year, the share price can go up. Let's say it has gone to 50 rupees, which means you have earned 40 rupees per share. So altogether, you have earned 40 rupees into 1,000 shares, 40,000 rupees. We call this the capital gain. The company will also share part of their profit with you. This is called the dividend. For example, if the company ABC decides to pay 3 rupees to each share, you will get here 1,000 into 3 rupees, 3,000 rupees. So end of 1 year, your investment of 10,000 rupees has earned you 40,000 as capital gain and 3,000 as dividend. To enter the stock market, you have to register through one of the stock brokers, and they will help you how to buy shares. But my advice to people is, don't just buy shares without learning, without studying about the stock market. The third type of investment opportunity, mutual fund. Now, when I say mutual fund, there could be many people who can't understand about these fixed deposits, about this rating, about the risk. They may not understand about the stock market, or they may be very busy at their workplace that they have no time for fixed deposits, for stock market. So people like this can go to these companies, which is called the mutual fund. These companies take your money. They have professionals, experienced people, learned people, professional investors whose full-time job is studying and investing. So they will take your money and they will invest in fixed deposits, in stock market, in bonds, in treasury bills, and various other instruments. And end of the period, whatever profit they earn, they will give it back to you. Of course, they will charge a small management fee. So if you invest 100,000 rupees with a mutual fund, they will invest in different places and they will give the return, the profit, back to you after deducting a small management fee. There are few mutual company. There are many mutual fund companies in Sri Lanka. Let me give some examples. The First Capital, Guardian, Namal, NDB Wealth, and many more. So you can pick a mutual fund company and invest with them. They also give you the facility to see your balance on a daily basis. How much is the value today from your phone? Now, one of the things that I do in the morning, I log into my mutual fund and see the balance I have there. So you don't need to do anything. You just invest, you see the growth. And if you want any questions, if you want any transfers, if you want to withdraw, you can speak to your relationship manager at the company. You can also give a standard instruction to the bank to transfer every month from your salary to the mutual fund. The fourth type of investment opportunity is real estate. You buy a land or you buy a building. Now, I live in Wattala, closer to Colombo. 20 years ago, in Wattala, a purchase of land was 80,000 rupees. Today, it is 2 million rupees, which means if I have invested on one perch with 80,000 rupees, after 20 years, it has grown to 2 million rupees, 1,920,000 I have earned. That is capital gain. In addition to that, if I have bought a building, a house instead of a land, in addition to capital gain, I can also earn a monthly rent. So if you buy a building, you have capital gain and a rent. If you buy a land, you have only capital gain. Now, as youngsters, when you start working, or if you have worked for 2-3 years, you will not be able to earn and save enough money to buy a land or a building. And if you try to earn and save and then buy, the prices also keep going up. To invest in real estate, you can take a bank loan. Let me explain. Let's say you buy a land for 1 million rupees. We'll say 10 purchase at 100,000 rupees each. Now you don't have the money. So you take a loan of 1 million rupees at an interest rate of 10% per year. Now, after 1 year, you would have paid 100,000 rupees as interest. However, the land that you bought would have gone up in price by, let's say, 20%. So end of 1 year, you are gained 200,000 rupees or 20%, and you have spent 100,000 rupees or 10%. So your net gain is 100,000 or 10%. To do this, you need to be careful as to where you are buying the land. All the land doesn't go up like that. So you should buy land in an area where the land price is appreciating, going up. And your land appreciation or your capital gain should always be higher than the interest rate for you to gain. So this is the fourth type of investment opportunity. The fifth type of investment opportunity is foreign currency. Now, legally, in Sri Lanka, you are not allowed to invest in foreign currency. However, if you invest a little sum, maybe you buy a few $1,000s, the authorities allow it. They are not very strict. We know about 2 years ago, the US dollar, $1 was about 180 rupees. Today, it is about 220 rupees. About a year ago, a Canadian dollar was 135 rupees. Today, it is around 180 rupees. So if you have bought $1,000 at the right time, and if you sell it at the right time, you make money. But as I said earlier, this is not legal, so don't do it in a big scale, maybe a few thousands, which the authorities allow. To invest in foreign currency, you need to read a lot. You need to know what is happening in Sri Lanka, what is happening to our economy, what is happening to the world economy. So once you have that understanding, you will know whether which currency will appreciate, which currency will depreciate, and you can buy and sell foreign currency. Or if you go abroad and come, you can keep your dollars. If you work abroad and come, the government allows you to have a dollar account, and you can keep your dollars in the dollar account. By that, the dollar is appreciated and you earn money. The sixth category of investment opportunity is gold. Traditionally, Sri Lankans, Asians invested in gold. Gold is the oldest form of investment. At home, we all know, many of us have experienced it. When we need money, immediately we take the chain or the bangle of our mothers, wives, sisters, and go and pawn and take a loan from the bank. And we pay interest and take the jewelry back. So investing in gold is one of the oldest form of investment. Having said that, we also need to know when to buy gold, when to sell gold. Every day morning, as a practice, I check the gold price. Today, if you do a Google search for gold price, you can see this. Today, the gold price is 1,776 US dollars per ounce of gold. If you remember, in Sri Lanka, about 3 or 4 years ago, one sovereign of gold was about 46,000 rupees. Today, one sovereign is 120,000 rupees. So when the gold price is low, buy gold. And when the gold price is high, sell gold. Keep an eye on the gold price. Again, gold price is dependent on the world economy. When the COVID-19 came, all the economies in the world crashed and the gold price went up to $2,000. Now things are improving, gold price is coming down. So wait when the gold prices come down and buy gold, and when it goes up, sell gold. These are but a few investment opportunities, the main ones that I am sharing here. But there can be other investment opportunities as well. So you can decide and invest in the other ones. Having said this, let's go back. Miss Tara, can you go to the earlier slide, please? Right, thank you. So if you look at this slide, the last line or the star line, income minus investment equal expenses. Income minus investment equal expenses. Now I want every one of you to remember this. Keep it in your head always. Can we all repeat it once together? Income minus investment equal expenses. We need to always remember this. Now, we saw what are the investment opportunities and how you should invest. You should put a fixed amount, 20%, 30% every month and invest it. We also saw how much you should earn. What should be your income? You need to know the average Sri Lankan income, 62,000 rupees per month. And the earlier you earn, the more you earn, the better you are. You will have more money for investments as well. Let us look at the other category, the expenses. So in this formula, if the expenses are low, you can invest more. If the income is more, you can invest more. I hope it's very clear. If the income is high, you can invest more. If the expenses are low, you can invest more. Now, income, you should not depend only on your monthly salary. Now, you may get a monthly salary which should be higher than the average income. In addition to that, try to earn money. Few examples. You can start a small business. You can join with somebody and become a partner in a business. You can give tuition on Saturday and Sunday. You can bake cakes, shorties, and sell them. You can buy and sell. So these are supplementary income. So your income is not only monthly salary, but it is supplemented by other business, other investments and stuff. So by that, keep your income high. Now let us look at how we can manage our expenses and keep it low. Now I told at the beginning, the first type of people are people who spend more than their income. By that, they fall into trouble. So how can we manage the expense? I will give 4 tips. There are more than 4 tips, but I will share 4 tips with you. 1, have a budget. Beginning of the month, have a budget for your expenses and spend according to the budget. Tip 2, when you manufacture something or when you import something, in Sri Lanka, every item we buy is either manufactured or imported. When you manufacture or when you import, they sell it to a wholesaler, and then the wholesaler will sell that to a retailer, and we buy from the retailer. So if we can buy from the manufacturer or from the wholesaler, you will be able to buy at a lower price. I will give a simple example. Kerosene oil, lampu tel that we all buy. When you go to the shop close by and buy a bottle of kerosene oil, it is double the price of what you pay at the petrol shed when you buy oil. Second is, when you're buying, if you buy in small quantity, the price is high. But if you buy in large quantity, you can get the wholesale price and it will be cheaper. So plan your purchases from manufacturers or the wholesaler, or buy in bulk. The third tip is buy only what you need. Don't buy just because others are buying, to compete, to show off. Be simple. Buy only what you need and not to compete. Just because your friend has bought a new smartphone, you don't have to buy a smartphone. Just because your friend has a large TV, you don't need to buy a TV. Buy what you need with what you have and be simple. And the fourth tip is be careful with your credit card. When you start working, credit card companies will come and sell their credit card to you. And some people think having more than 2-3 credit cards is a prestige. But what is a credit card? Let me explain to those who are still not working. When you work, they will give you a credit card with a limit so that you can go and buy things without cash by using your credit card. The next month, they will give a due date. On that date, you have to pay, you have to settle your credit card bill. It's a very simple operation. But what happens? The credit card companies will come up with offers. They will say 40% off for the weekend at this hotel. If you buy a laptop or a TV, 12 months interest-free installment. If you buy from a supermarket for more than 5,000 rupees, 10,000 rupees, 25% off on your vegetables, on your fruits. So we happily go and buy these things. And when the due date comes, you find it difficult to pay the bill. And the interest-free loan or purchase becomes a high interest paying loan. Credit card loans or credit card payments are at 28% or more. More than double the normal interest rate. So you buy thinking interest free, but end up paying more than 28% as a payment to the bank. And if you don't pay the interest, you have to pay interest on interest. So be mindful of the credit card and especially the offers. Buy only what you can repay. Don't just buy thinking I will be able to repay. So think and buy in advance. Be careful with the offers from the credit card. With that, I would like to just summarize what we saw. We saw we need to earn money from 20 years to 60 years. We had to put aside money, invest money for our retirement. We need to know what is the average income of Sri Lanka. Today it is 62,000. We should try to earn more than that and early as possible. When you earn this money, rather than saving, it's good to invest. And when you are investing, you need to make sure you either invest in a FD, fixed deposit, stock market, mutual fund, real estate, foreign currency, gold, or any other investment opportunity. You need to also remember not to depend only on your monthly salary, but to do something extra, a business or giving tuition, something to supplement your income and keep the income high. And you need to manage your expenses properly to keep it low. Thereby, you will have a higher amount to be invested. And the more you invest, the more happier you will be, more comfortable you will be till death. With that, I would like to conclude this presentation, and I will be more than happy if you have any questions. Thank you.
Miss Susan, I think your audio is a bit.
Can you hear me now, Tara?
Yes, yes.
Okay, sorry. I think I've been talking to you with my microphone switched off. So thank you very much, sir. While you were giving this presentation, I think it did enlighten a lot of us, especially about how to manage our income versus our expenses, because I think a lot of us live in this mentality of earning and spending, but we don't look at the investing and the saving points. So there were quite a few questions. The first question is, this kept on coming from different people, is what is your opinion about cryptocurrency, sir?
Well, I thought this question will come. Cryptocurrency, my personal opinion, is better not invest in it, because cryptocurrency is not allowed or encouraged by the Central Bank of Sri Lanka. Most of the countries don't encourage that, but they allow it to happen and they leave the risk with the investor. So personally, I don't invest anything in cryptocurrency until the central bank accepts it. Till that, I personally say I will not invest. And my opinion about cryptocurrency is highly risky and we are not knowledgeable. But the decision is left to the individual. You should be ready to take that risk.
Right, so thank you. Thank you for that. Another question is, I think you mentioned a few reputable mutual funds in Sri Lanka, and I do have a participant who's asked if you could re-mention these names again, sir, if that is okay with you.
Okay. NDB Wealth, which is the largest mutual fund operator in Sri Lanka, NDB Wealth. You also have Nama, then you have Capital, First Capital, Guardian, Unique Trust, and few others are there. There are many mutual funds. If you do a Google, you can see many funds, but the largest is NDB Wealth. I'm not recommending, but I have it in NDB Wealth.
Right, sir. So I think the next question, very interesting, sir, is something that you and I have personally had a chat about, and that is about share market. So after investing in share markets, a lot of people have this notion that you should have immediate results.
Yes.
So this notion of buying and then immediately selling the minute the shares go up. What is your opinion about that, sir? How do you actually see a profit if you're investing in the share market?
Share market, now if you buy vegetables, you have to sell by end of the day or the next day. Otherwise, the vegetable has to be thrown away. That is vegetable market. But if you buy a textile shop, we'll say you buy a textile shop or electrical shop, or you open an electrical shop. Maybe on the first day, you will not have a single customer. Or maybe after 1 week, you may have had only 2 or 3 customers. Now, just because you didn't have a customer on the first day or second day, you don't close down your shop. You don't sell your shop. You will run that business for 6 months to 1 year. And after that, you will take a decision whether to continue or not. That is investment. So when you say investment, it means for a longer period. That is what I mentioned at the beginning. Savings is for short-term use. Investment is for a long-term return. So when you are investing in stock market, don't look for immediate return. Not to buy and sell on the same day, but keep it for a period of time and then either sell or keep it. Because you need to remember, every time you buy shares, every time you sell shares, you have to pay around 1.2% as commission. So if you buy a share at 10 rupees and sell at 13 rupees, you have already paid 2.5% commission. And if you keep on doing that, you would have paid 75% of your earning as commission. But if you buy at 10 rupees and you keep the share till it goes up to 100 rupees, you have made over 90 rupees profit. Only a small amount will go as commission. So answering your question, in stock market is not buying and selling, it is long-term investment.
And quite a few questions. Another interesting question that has come up is, what would be a secure investment without risk in Sri Lanka. So I do know that, that is one point. I think especially addressing the females, we have a lot of, this is another thing that Samsa and I have talked about, is that we are less of risk takers. So
Yes.
we find it very difficult. We need to see what is the actual return before we invest into something. And if there is anything that is a risk-free investment, sir, what would it be? Quite a tricky question, sir. But
life, everything has a risk in life. No risk, no gain. So what we are talking is not zero risk, but lower risk. So what you can do, in my view, is if you buy a land in a good city, a urban area, there is no risk of that land price coming down. Or if you invest in a fixed deposit in a BBB or A rated or 2A rated bank, it is less risk, no risk. If you are investing in a AAA bank, 100% it is risk-free. But your interest rate will be low. It's at a cost. If you are 100% worried about the risk, your return will be low. So if you are ready to take a low return, you have AAA, AA, BBB rated finance companies or banks, or you can buy in land which is risk-free.
right, sir. With this idea of banks, now I know fixed deposits is one thing that we are very familiar with. I think the generation before us actually did. They were quite popular with fixed deposits. So if you are having an FD, so which type of banks would be the safest? Are they government, are they private, or commercial banks?
The same answer. You have to check the rating. Now I will ask a counter question. The government of Sri Lanka is rated CCC1. The Citibank is rated AAA. So is the government bank, People's Bank, Bank of Ceylon, more secured, or Citibank is more secure? Can you answer that question? So
I would, you want me to answer that?
So traditionally, I was joking, traditionally, we had this in our mind. Our parents have put this. Always keep the money in the government bank because government will never crash. But we had to come out of that thinking. It is an individual wish. Banks, international banks like HSBC, Standard Chartered, or the largest Sri Lankan bank, commercial bank, and them are safe. You have to check the rating. The rating is more important than whether it is private or government. If it is rated well, my personal view is anything above BB is safe. But don't put all your eggs in one basket. Just split and put it, then you are safe.
So I was wondering whether that answer, don't put all your eggs in one basket, could actually work for the next question, which is, what would you recommend, Samsa, for a young person who has just started working? Would it be to invest or to save or do both? If do both, is there a formula? Is there a ratio of how much goes for investment and how much goes into savings?
My advice would be, you can do both together. For example, we will say you register with a mutual fund. So, and you give a standing instruction to your bank, out of your salary, we'll say 10% or 20%, to transfer to the mutual fund. So it is a form of saving, secured, while it's actually an investment. So you can do both and allow your money to grow at the mutual fund. And be careful with your income, be careful with your expenses, so that with time you will be having a substantial amount with a mutual fund, and then you can move into a land. You can take the down payment from your mutual fund buy a land, and for the balance, you can take a bank loan. By that, you are slowly moving in. And of course, if the gold price is very low, if next month gold price comes down to 40,000 rupees, definitely buy as much as you can. So don't put into one form of investment, but try to diversify your investments. So you can start beginning with saving and investment by going into a mutual fund rather than keeping the money in a savings account, which gives you only 3%. But if you put the same money in a mutual fund, you will get 7-8% coming from that.
Thank you, sir. Tara, I believe you have a few questions as
Yes.
well.
So as a person, like if a person doesn't have a large capital for investment, with this current economic situation, investing and saving is a bit difficult. So what do you recommend in a situation like this, sir?
We need to manage what we earn. So like I said earlier, don't try to do what others are doing. So if your income is 40,000 rupees, put aside 4,000 rupees as investment and manage with 36,000 rupees. If your income is 100,000 rupees, put aside 20,000 rupees as investment and manage with 80,000. So whether your income is high, then you can invest more. But if your income is low, you can still invest a small amount. But we need to have that habit. Like Warren Buffett said, save first and spend the left. If you try to think only when I have extra money, I am going to invest, it will never happen. Because as your income goes up, your needs will go up, your expenditure will go up. So as a practice from the beginning, put aside a certain percentage, 10% or 20%, and manage with a balance. So during this COVID time, yes, it's difficult. But when you start work, even if you, and I will give a small example. I know this three-wheeler driver who earns about 1,000 to 1,500 rupees per day. He was telling me that he every day takes 100 rupees and give his wife to keep in a box and manage only with a balance. So I think that's a good example for all of us.
True, very true, sir.
Okay, so sir, this is something that I am very interested to know the answer for, because there was a point where I was looking into life insurance, and one thing that they do tell you is where you can invest in an insurance scheme. What is your opinion on this, sir? Is this a secure means of investment? Is it something that is advisable, sir?
Well, it may take a long time. Actually, insurance is not investment. So insurance is where you cover the risk by taking cover. So if you are working, you have a family, anytime something can happen to you. And you may lose your job or you may lose your life. Then what happens to your family? That is why we have an insurance cover. But today, many of the insurance companies, what they are doing is, they are combining the life insurance with a sort of investment. So what you do is you pay a premium monthly, which is invested. Part of it is invested. So end of the period, you will get a return. And during the payment period, if something happens to you, what the insurance company will do is, they will pay a life cover immediately, and the company will pay the monthly amount you are paying on your behalf, and end of the maturity period, they will give that money to your dependent. I will give a small example, I think it will explain. Say you have a child of 2 years, you take up education cover, insurance cover called education cover for 16 years. and you pay monthly 5,000 rupees. End of, if nothing happens to you, at 18 years, what the money that you paid minus certain charges, life cover charges and other charges, with a return on their investment will be paid to you. But after 2 years of taking the cover, if something unfortunate happens to you, for your child's education, immediately they will give a life cover, maybe 1 million, 2 million, whatever you take. So that will go for your child's education immediately. And the company will pay that money till the child is 18 years, what you plan for the child. And at 18 years, that money will be paid to your child for the higher education. So you are combining here a life cover with the investment. Hope I am clear. It's the same thing. They have different names. They will say education cover, pension cover, savings cover, health cover, various covers, but the concept is the same. You are combining, the main thing is the life cover. You are combining that with the investment. But some of the brokers, what they do is they are selling it as is an investment, which is wrong. Insurance is not an investment. That is an additional benefit.
Thank you, sir. Thank you very much. Tara, I believe we have a few more questions.
Yes, of course we do. So are asset management companies and unit trust companies the same? If they are different, which one do you think is more safer?
I cannot make a comment on that. But trust company and as a mutual fund is the same. The investment, they break the investment into small units and they sell it as a unit. So when you invest, you are investing in units. It's a bit of a higher thing. It will take time to explain, but in simple, it's the same. But I cannot recommend any company because it's not correct. You need to do your own study and then go.
Thank you, sir. Ms. Susan?
Yes, Tara. So thank you very much, sir. I do think we have covered all the questions. Tara, is there anything else?
I have one last question. Is there any minimum amount in having a mutual fund, sir?
Normally, mutual fund starts with 5,000 rupees. But different companies may have different policies. Like I said, my company is NDB. I invest with NDB. There it is 5,000 rupees, but different companies may have. But I think normally that is the norm, 5,000, and you have to invest in 5,000s.
Sir, there are a few more questions. I think we have time for just two more, sir. One is, what is Bitcoin, sir?
Bitcoin, cryptocurrency, these are all the same, different types, but it's the same type of investment. Like I answered earlier, I will not recommend that because I prefer any investment which is approved by the government and the central bank.
And one last question, sir, is there any app that you would recommend for budgeting and financial management? Now, the person who has asked me for an Android app. So I'm not too sure whether sir could help us out, but is there any app, sir, that you would recommend for, having budgeting and personal financial management?
There could be apps, but with my age, I don't use these apps. I prefer mentally doing the budget and having it, enter it and keep it. Or I write down my budget. But I am not very sure. There may be. But I think not to depend on an app, but to depend on your sense.
Thank you very much, sir. Thank you very much, Mr. Jaisalvan. It was a pleasure having you as always. And I learned a lot. I am sure, Tara, like we started out, we had the question about financial management and there was so much, sir. Thank you so much for giving us I know this is just touching the tip of the iceberg, but thank you so much for the wealth of knowledge that you shared with us. And I'm sure even our participants enjoyed it and were able to take this into our life and hopefully progress towards a better future. So thank you so much for your time. So I know you're very busy, but thank you for taking the time to join us, sir. So with that, I would like to remind all our participants, we have one more session next week. It's going to be on grammar. So grammar is something that, I think Tara would also agree with me. There are times where you are a bit confused. What do I use here? What is the word? Is it a was? Is it were? Why do I say, if I were you, I would, right? So there are those normal mistakes that we all make with grammar. And English isn't an easy language, is it, Tara?
Not at all.
Not at all. It's quite a difficult language. So we will be touching on some of the little points, the very common mistakes that we observe, and how can we edify, how can you make your language better, and how could you iron out all these little grammatical issues that we have, maybe not so little, maybe a bit of the advanced issues as well. So join us, please do join us next week. It is our last session, and there were so many questions about the certificates. So once we finish the session, we will be going through the participation. So the feedback form, like we kept on telling you, the feedback form is our way of checking whether you've been a part of the program or not. I think Tara has shared the link. I did so a bit earlier as well. So go into this Google form, give us your feedback about the session. We'd love to hear what you have to say, and it helps us improve how we can serve you, isn't it, Tara? And we do enjoy going through it, reading your lovely comments.
Yes, indeed.
Yeah, and also the recommendations. We have taken quite a bit of it on board. So thank you very much for that. Please do go into the Google form, give us your feedback, and we will be sending you your soft copy for the certificate within 3 weeks, right? So give us some time. There's a lot of feedback that we have to process, a lot of processing that needs to go into this. So Tara, is there a problem with the link? I am getting... Mohammed, let us check and share the link again with you if there's a problem. Is it only for Mohammed? Is there anyone else who can't?
I think it's only for Mohammed, this, because it opened up. I just checked it.
Right. So please, I think, what's that called? Refresh. Sorry, my brain. Please refresh and it should work. Not to be too tough. We are not going to be tough. Please send us in your feedback. We will be looking at whether you have participated for all of the programs or the webinars, and you get a certificate of participation within 3 weeks. So make sure that you do go to the feedback form. Join us next week. Next week, we might ask in a few of your contact details to send these form across to you and all of that. It's going to be a soft copy of the certificate. So let us share the link one more time with you. Thank you very much for being a part of this journey. We have almost come to the end. One more session to go. And yeah, hopefully we can come back to you with another session, isn't it, Tara?
Hopefully, indeed.
Hopefully.
I actually kind of enjoyed these sessions, Miss.
Yeah, same here. Same here. So thank you. I mean, it wouldn't be possible without the participants. So thank you very much. Thank you very much for being a part of this. And thank you for all of the kind words. Thank you for your suggestions as well. It was fun. And we also learned in the process, because, I mean, both of us are teachers. So we didn't expect to do this, but we're enjoying this. We're enjoying this. Thank you very much. One more session to go, guys. This is next Thursday. Same time, Zoom link will be shared with you. So join us for our grammar toolkit, Tara, with Naren sir again. So another interesting session. If there's any questions, I'm sorry, Sam sir has left, but if there's any general questions, we will be around here for a while. But thank you, everyone, and have yourself a pleasant evening. And we will see you again next Thursday. Thank you, Tara. Thank you so much.
Thank you, everyone, and have a pleasant evening.
Thank you. Dilum, I'm sorry, I do not know about the recordings because they are with the AM Center, but let me ask them and probably let you know next week, Dilum. So please remember to ask. Hi, Mr. Sanjeeva.
Please, Susan, we are uploading all these sessions through our YouTube channel. From first session to the last session, so hopefully they can watch all the sessions through our YouTube channel after 2 weeks time.
Yes, so do go back, like us on Facebook, give us your reviews, and we will be having these sessions there, right? So please, I mean, this would actually be another way that we will be able to connect with you and hopefully see you with another series of webinars. Oh, are we going to have an exam for the next session? Tempted to say yes. Who is this? Ahmed, tempted to say yes. Let us think about it.
You should have not asked that question, Ahmed, our teacher.
Yeah, tempted to say yes, Ahmed. Let us think about it. Be ready, Ahmed. Take down notes. Be ready for an exam. So once again, thank you, everyone. Yes, let me share the YouTube link with you. Give me a second. Sarah, I'm going to let you take over while I check the YouTube link.
Until Ms. Susan gets the YouTube link, please make sure that you fill in your feedback form and let us know what you think. Also, that shows how you have participated within the webinars. Oh, the link is already put. All right, so this is our YouTube link.
So Mr. Sanjeeva was faster than me in getting the link. So thank you, Mr. Sanjeeva. Thank you very much for your kind words, everyone. It has been a pleasure being with you over the last couple of weeks. I missed the last session, but it has been lovely interacting with you. I'm sorry we couldn't hear you, but do go to our Facebook page, go to the American Center's Facebook page, like, follow, so that you will be informed on future webinars as well. And wishing everyone a very pleasant evening. Those of you who are celebrating Deepavali, happy Deepavali to you. And we will see you again next Thursday. Right, about the handbook, we are working with the facilitators. Let us get back to you on that during the next session. Who am I talking to? Ovini, let us get back to you during the next session about that. It's just that, you know, these facilitators are also very busy. So though we have asked them, there are few materials that haven't come in as yet. So let us get back to you, Ovini, with regards to that. I'm sorry, I don't have concrete information about that. Again, question about the exam. Tempted to give you an exam, but we'll see. Do we have an extra session on last week? I believe that this was mentioned during the webinar, Ms. Tara, about interviewing skills.
Yes, I think it was.
We are going to have a separate session on this, but not relevant to the gap, bridging the gap, but we will inform them with a different session, hopefully coming weeks.
Thank you, sir. So like I said, you know, another reason for you to like us on Facebook, follow the American Center as well on Facebook and Instagram. We will keep you posted through these social media sites. This was the beginning of a journey, I believe, that is going to continue. So interact with us. Let us know what are the other areas that you would like us to cover, and we might take it up. So we'll keep you posted with regards to it. Grammar Toolkit, how it's happening is the session will be next week. So as usual, you will get a reminder on your email. So join us next week for the session. Make sure to be here. It is the end of Bridging the Gap. So we would love to see, to hear from everyone, at least read your comments next week. So Tarushi, the website would be our social media pages. Tarushi, you will need to visit us on Facebook, and we do keep you posted through Facebook. Also, like the American Center's Facebook and Instagram pages. They do have a lot of programs like this, so we will keep you posted on future webinars, and also the AM Center will do so with regards to their programs. Tara, is there anything else, or have we covered all of the questions?
I think we have covered all of the questions up to now.
Okay, so thank you, everyone. A reminder, next week is going to be on Grammar Toolkit. About the exam, we may have an exam just to sum things up, but I can't guarantee on that. But I would recommend you to take notes during the session so that if we have an exam, you'll be able to pass it. And do go to the Google page, give us your feedback, because this is one way that we know you've been a part of the program, and we'll be able to give you your certificate of participation. So it'll be within 3 weeks after the webinar. That is next Thursday is our last date. So 3 weeks from there. So thank you, everyone. Thank you, Tara. Well done. And we will see you next Thursday, everyone. Thank you so much for being a part of today's program.